Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is May 21st. Today we're going to take a look at one out of the consumer discretionary sector, Polaris. Let's jump right in. Before we get into the video, if you could take a moment to help me out, it would really be appreciated. Hit that thumbs up button down below. Make sure you subscribe to the channel. Hit that subscribe button. Ring the notification bell so you're notified whenever we put out any new content. And drop a comment down below. Let me know what you think of the video. I do these stock pick of the day videos Monday through Thursday whenever the market's open. And if you have a company you'd like me to look at their stock, go ahead and drop it in the comment section below and I'll try to work into the rotation on a day it pulls back. Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I'm interested in investing. Just because it meets 5 of 8 or 6 of 9 if it's a financial company, I use price to book for banks specifically, does not necessarily mean that I'm investing. It means it goes on my watch list and I do more of a deep dive into the company, look at the financials, see what price I'm willing to pay by doing a discounted cash flow analysis, and then wait for the company stock to align with that price. We are going to run through this screener in this video. That's exactly how I have these videos set up, to run through this, and then at the end we'll take a look and see if this one meets the screener or not. So if you want to know more about this company, check them out at www.polaris.com. That's www.polaris.com. That is their homepage where I pulled this information from. Since 1954, Polaris has proudly redefined, and then raised the bar again for the power sports industry. It is reflected in the innovation we bring to products we design and experiences we create for all those who play, work, and think outside. That seems to be their catchphrase, kind of like Nike, just do it, which I don't know if that's Nike's catchphrase anymore, but it was back in the day. Theirs seems to be think outside. You can read the rest of this here. But some of the vehicles, you can see here some of the vehicles, right? Motorcycles, some of the Rangers, the side-by-sides that are out there. They have off-road vehicles, you know, the Rangers, the Generals, the RZ, side-by-sides, snowmobiles, on-road motorcycles, marines, so pontoons, boats, commercial and government vehicles. I'd have to look more into that. I'm not sure exactly what they produce for the government, but it looks like they have their hand in some government production as well. I'm assuming they provide, you know, maybe four-wheelers, some of these side-by-sides, some of that sort of material for the military, maybe even motorcycles. I know back in the day, Indian, which is one of their Indian motorcycles, I know they provided, way back in the day, Indian provided motorcycles, as did Harley Davidson, for the military. So maybe it's motorcycles too, but I'd have to look more into that one. But again, www.polaris.com, that's their homepage if you want to know more about them, or if you want to buy one of their products. Now, the reason we're taking a look at them, down 1.73% on the day. We are talking about Polaris Incorporated, ticker PII, out of the consumer discretionary sector. Closed out the day at $82.26. Looks like they're down a little bit in the after hours here, at least as of the 4:07 whenever I pulled this information. 52-week range as low as $81.93, as high as $138.49. So they are really bouncing right up against their 52-week low. You can see, you know, a bit of a sell-off today. Market cap of $4.649 billion, so they are a small cap company. A beta of 1.61, so more volatile than the overall market. And again, you can see that volatility throughout the day. Pretty much a sell-off, but still, you know, to drop like that, try to rebound, another big drop, another rebound, another big drop, try to rebound, and overall to be down. A lot of volatility there. Price earnings ratio, PE ratio, $12.04 per share. EPS sitting at $6.83 per share. Earnings date coming up July 23rd through July 29th. Forward dividend is $2.64. They are quarterly payer. We'll see that here in a little bit. They have a nice starting dividend yield of 3.15%. Ex-dividend date coming up June 3rd. Looks like they're going to pay out June 17th. So you would be in line for the next dividend if you were to buy them today. And Yahoo Finance has a one-year target estimated price at $97.93. I'm not affiliated with Yahoo Finance, just one of the sources I like to go to for information. So they do see some upside as far as stock price appreciation here, right? All the while you're waiting for it to go back up, you could collect that 3% dividend. Now we're going to jump over to dividends and splits and look at dividend yield theory. To do that, we go down to the 5-year dividend yield average, 2.5%. We compare it to its forward, or over here, current 3.15. They're the same, 3.15. And since it is higher than their 5-year average, that speaks to undervaluation. These numbers are inversely correlated. If it's higher, like it is, that's undervaluation. If it was lower than 2.5, that would be overvaluation, at least according to dividend yield theory. Payout ratio, very low. I like 75% or less. This is sitting at 38.21%, so that leaves them a lot of room to reinvest back in the company, make acquisitions, pay down debt, pay dividends, buy back shares, that sort of thing. So a lot of free cash flow left to do other things than pay out dividends, which means that their dividends should be relatively safe. Now we're going to jump down and look at free cash flow. We want growing free cash flow over time because typically if a company has growing free cash flow, they have growing dividends to go along with it. Going back to 2020, you can see here $804 million. Big drop in 2021. We all know what was going on, in 2020 and 2021, so that's probably part of it. Down to 10.9 million, though they did increase. I'd have to do the math and see if that offsets. It doesn't look like it would offset the total amount here, but it may offset some of the decrease in free cash flow. The big chunk of repurchasing their own shares in 2021 and 2022, not so much in 2020. But 2022, they were back up to 202 million in free cash flow, and 2023 back up to 513 million. And again, nice, consistently reinvesting or repurchasing their own shares here. So I like to see that. 2 good years in 2021, 2022. Again, I'd have to do the math to see if this offsets, but it doesn't look like it does. So I will say from 2021 on to 2023, I'm seeing growing free cash flow, but not from 2020. So this would not meet the growing free cash flow over the last 4 metric, in my opinion. Again, I'd have to do the math, but I'm just going to say it's not. Now, I jump over to stockanalysis.com. We're going to take a look at that one. That's another source that I like to go to. I recommend more than one source so you can make sure the information you're getting is accurate and up to date. You pick any sources that you like. Just don't blindly trust one source. They could be outdated information or inaccurate information. Now, they have 16 analysts that have taken a look at this. They call it a consensus hold. And if you were to go to stockanalysis.com, you'd be able to click on each one of these, right, and say how many are calling it a strong sell, a hold, a buy, or a strong buy. So more are obviously calling it a hold or a sell than are calling it a buy or a strong buy right now. They have a low estimate of $80, which would be a negative 2.45% decrease from where it currently sits. So they'd have to drop a little bit lower for it to hit their low. Pretty close to the low right now, 82.22. Average estimate of $106.81, which would be a 30.24% increase. That's even higher than what we saw with Yahoo Finance on the previous page. And if it happened to hit their high of $145, that would be a 76.81% increase. And if you were to buy them now, obviously you'd lock in that 3% dividend yield. Now we're going to jump into statistics here. We're going to look at how efficiently this company is reinvesting its capital. To do that, we look at return on equity, ROE, and return on invested capital, ROIC. I like 10% or better for these metrics. Return on equity sitting at 29.3%. Return on invested capital sitting at 13.67%. So beats both of those that I'm looking for at 10%. EPS growth, I like 5% or better. They're forecasting EPS growth over the next 5 years at 14.08%, so beats the metric I'm looking for there. With revenue growth, not a lot of revenue growth, but some 1.62% forecasted over the next. So slow revenue growth, but nice earnings per share growth. Let's jump over and look at their dividend. So again, quarterly payer, low payout ratio, 38.71%. Slow dividend growth though. With such a low payout ratio, I'd like to see a little bit faster dividend growth. This is year over year, so you might look at what they are over maybe they're a little faster in the 5-year or 10-year, but I'd like to see more dividend growth out of a company with such a low payout ratio. Now, companies like this typically are cyclical, right? When the economy is doing good, people might buy stuff like motorcycles, boats, snowmobiles, those sort of things. But whenever we go into recession, people forego those purchases. So it is a bit of a cyclical company, and maybe that's why they're doing slow dividend growth to kind of weather the storm whenever they have those slow times. But again, as a dividend growth investor, I like to see a little bit more growth than 1.55%, though you are starting at a 3% dividend yield. Usually I like a little bit higher than that. I don't mind a company like Verizon, for example, with a 4+%, 5. I think I've locked in a 6% dividend yield with Verizon. It has slow dividend growth like this too at 1.something%, 1.33, I believe, but it's starting at a 6% dividend yield, so twice as high, right? So that's why I can go with the slower grower if it's a higher starting dividend yield. But I would like to see a little bit better here. 26 years of growing the dividend, buyback yield of 1.55%, shareholder yield of 4.76%. Overall, the numbers look very good on this. Again, the only thing I really don't like is the dividend growth on this one, and the free cash flow looks like it was growing over the last 3 years, but is down slightly from where it was 4 years ago. Going back to 2021, you can see here they were paying 63 cents. They raised it up February 2022 to 64 cents. Raised it up again February 2023, 65 cents, and then again February 2024, most recent raise up to 66 cents. So yeah, it's a pretty consistent 1 penny raise, right? That's that 1.55% dividend growth. So would be nice to see a little bit higher dividend growth. They do pay out on the March, June, September, December timeframe, just like a lot of companies do. And if we're looking back at the stock screener, yep, we started out understand the business, check there, growing free cash flow over the last 3 years, but not over the last 4 years, down from 4 years ago, so no check there. Growing dividend, yes, even though it's slow growth. Dividend payout ratio of 75% or yes, much lower than 75%. Check valuation based on dividend yield theory. Currently, dividend yield theory says it's potentially undervalued. It is right up against its 52-week low. It is not in my portfolio, so the within 15% of or below my cost basis doesn't apply, but it is within 15% of a 52-week low. It's even closer than that. Return on invested capital and return on equity are both 10% or better. And earnings per share growth is, I think it was 14, almost 15%. So it definitely meets the 5% or better that I'm looking for there. We didn't look at price to book because it is not a bank. So overall, this one, and it is in my watch list, this one is on my watch list. If I was looking to add something in the consumer discretionary sector, this would definitely be one that would be at the top of my list. I recently added Starbucks, so I'm not really looking for anything in that one. But this is on my watch list. So I am watching this one. If this one was to bust down through its 52-week low and really set a new one, if this dropped down into the 70s, even the 60s, I would probably look to add it to my portfolio after I wrapped up building out my Starbucks position that I recently started. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, I do these stock pick of the day videos Monday through Thursday. So if you're interested in having me do one on a stock that you suggest, go ahead and drop that down in the comment section down below and let me know what you think of the videos. And share with anyone you think that might find value in the videos that's a dividend growth investor or an investor in general. Go ahead and share the videos with them as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risky Kansas money. Should never invest any amount of confidence. You can always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice, counsel, or a financial advisor.